What's up, everybody? I'm Phoenix real estate agent John Cunningham with eXp Realty, and today we're going to be talking about the mortgage loan process. So I know you guys are smart. You've been online, you've been doing your research, but I thought it would be really great if you could hear from a loan officer who's been in the industry for almost 2 decades. His name's Taum Hemmingson. He owns Market Line Mortgage. He's my co-host today, and Tom is going to try to fill in some of the blanks that you may be wondering about. So if you stick around to the end, we both got something special for you that'll reduce your cost to making a home purchase. You can get thousands back when you buy your next home through me and use Tom as your loan officer. So stick around to the end, make sure to get in on that. So Tom, I am excited to have you talking about the home loan process and help these guys understand how it works. So thanks for joining me.
Thanks for having me, John.
Yeah, man. So, hey, let's just first give a quick skim the treetops overview in 30 seconds or less, if you can do that, of how the home loan process works.
Yep, pretty simple. Loan application, borrower's going to give us their supporting documents. First stage in the process, once they get their offer accepted, is going to be underwriting. We'll get through underwriting with conditional loan approval. We'll go to closing. They'll sign at the title company. Once all the money gets to the title company, they'll get it recorded. And upon recording, you now are the owner of the home.
Good job, Tom. I think you did it in 20 seconds. So I want to break this down a little bit, just get into the nuts and bolts of some of this. So when somebody wants to buy a home, inevitably they've been on Zillow looking around, they find a house, and they said to themselves they weren't going to buy a house for 6 months, but now they see this house they love, and they call me and they want to make an offer. I let them know that they've got to get pre-qualified first, and they know that. They're smart, but they just don't know always exactly what it takes. And so one of the things I always stress when I start working with a buyer is get your documentation together. So what are the critical documents that you're going to need to provide for the lender in order to be able to get the loan?
Yeah, so what makes our pre-approval upfront the strongest is for them to be ready to send most recent 2 pay stubs, most recent 2 years W-2s, and most recent 2 months bank statements. So that'll cover all of our income and asset documentation for an employed borrower. If they happen to be self-employed, we don't need the pay stubs, but we'll want the personal and business tax returns and associated K-1s or W-2s, whatever they have with them. But that would cover all the big categories, income and assets.
Okay, not very complicated. I'd imagine most of our viewers would have realized that, but what I would encourage you to do is get those documents and keep them in a file on your computer so that when they're needed, you can access them. And they need to be within the last 30 days. So if they're 3 months old, you need to update them with the most recent pay stubs, bank statements, that sort of thing. And then when it's time to get pre-approved, you'll want to be able to upload them to a secure system. And Tom, you've got a tool for that, right?
Right off of our website, you'll see Secure Doc Upload. It'll allow you to create a username and password. It's an encrypted environment, so you can upload your documents in a safe place, and you'll be able to use that through the entire loan process. So
Okay.
it's a great spot to start.
So when somebody does this, we write an offer and we've got all that information to you and you've got them pre-qualified. One of the big benefits is in today's competitive offer environment, when you're making offers on homes, there will be homes out there that nobody's offering on. Those are the ones that back up to the freeway, have avocado carpet, or have a leaky roof and is in terrible condition, or it's overpriced. You won't have to worry about competing for those homes at all. But if the house is in good condition, in a good area, and it presents well, you're probably going to have to realize that you're going to have some competition for the house. So you want to be able to put your most competitive offer forward. And part of that is having a very complete pre-qualification form. So this form has a whole bunch of little check boxes on it. And a couple of them talk about these documents that we've been talking about. And if you don't have your credit pulled, there's a little checkbox that says, no, I have not had my credit pulled. There's another checkbox that says bank statements and W-2s and pay stubs have been turned in. If those aren't checked off yes, then the listing agent is going to tell their client that, and they're probably going to recommend that they don't even consider the offer. So even though you might be able to get that eventually, the loan officer can't fill that out as if he's received the information. So it's really important to get that documentation up front, isn't it, Tom?
For sure. For sure.
Yeah,
Especially
yeah,
like you
so-
said, in the market we're in now.
Totally, totally. And I just thought we'd also talk about the various home loan processes for the different loans. So let's talk first. What's the home loan process for an FHA loan? How is it unique?
So an FHA appraisal is a little bit of a different animal that you get than a conventional or VA appraisal. The VA appraisal is a little bit unique in and of itself because you order through the VA portal. Um, FHA and conventional get ordered through what's called an appraisal management company and randomly assigned out, so you and I don't know who the appraiser is going to be on that job. FHA requires a little bit more um, documentation, meaning like on W-2s, a conventional loan most of the time will only be one W-2, whereas if you look at FHA and VA, those are across the board 2 years W-2s. So the documentation is going to be a little bit more rich, a little bit fuller, but all in all, most of the underwriting processes are pretty similar though.
Okay. How about mortgage insurance?
Yep. So FHA has both upfront mortgage insurance as a premium and monthly mortgage insurance
And
premium.
who's that protect?
Protects the lender. So,
Okay.
the upfront money goes to FHA directly, and then the monthly does go to FHA. But really, that's there to protect the lender when they don't have a buyer putting at least 20% down. So that mortgage insurance covers that spread between 80% and whatever their loan to value is. Same with VA, but VA charges you upfront, but VA does not have monthly mortgage insurance.
With FHA, you're talking about 3.5% down, up to 5% down, or whatever you want, but the minimum is 3.5% down, correct?
That's correct.
Okay, so with conventional, what's the benefit of moving that buyer who's able to qualify for either one of those loans? What's the benefit of going to conventional?
The major difference is the PMI. So a conventional loan does not have upfront mortgage insurance.
Okay.
A conventional loan would have monthly mortgage insurance, but then you get the next big break. In a conventional loan, as you pay that loan down, you can actually work yourself out of paying PMI. Whereas on an FHA loan, if you put 3.5% down, the federal government has changed one of these great rules, and that PMI is now there on the life of the loan.
Okay, so even if they buy a $350,000 house, they put 3.5% down, and 2 years later they come into a windfall of cash and they decide to put an extra $100,000 down on the principal just to end up with a smaller mortgage overall. If they don't refinance it, they're not buying out of that mortgage insurance, even though they have a lot more than 20% down now, right?
That's right.
Okay, all right.
That's
So
why with a lot of our FHA borrowers, if we can get to 5% down, it does help change that discussion. Plus, the monthly PMI is less when you do 5% down.
okay, and with the home loan process, another thing that comes up is with an FHA loan, they have a unique appraisal. There are some requirements that the FHA appraiser has to abide by in order to complete that appraisal that take more time, cost more money, and if he or she notices during their appraisal inspection that there's an issue with water damage, like if they see a roof leak that's notable in the drywall, or they can see that there's a broken window or a missing stove, those things are required to be remedied before the seller can close on the house. So it puts a little added pressure on the seller. And if they have two offers, one FHA and one conventional, and all things are equal, then typically we're going to encourage them to go with the conventional loan offer just because of the fact that there will be less hoops to jump through when it's time to deal with the appraisal.
That's right.
Okay, all right, so what about VA loan? What's the VA loan process like, and what is the benefit to getting a home loan through the VA?
So really the major benefit for VA is it's 100% financing. So no money down required and no monthly PMI. They do charge you, the VA does charge you upfront mortgage insurance just like FHA does, and that gets financed into your loan so it doesn't have to impact their cash due at the time of closing. But you do have that fee. And the benefit though is no monthly PMI, contrary to FHA. If you do happen to be VA disability income, and so you have some disability from serving in the military, a lot of those then have no upfront VA mortgage insurance premium either. So the VA loan for somebody like that, where you have no upfront premium, no monthly PMI, you can do 100% financing, that loan is a home run.
Hey, it sounds like a really good deal for somebody who would like to use as little cash as possible to get into the home.
For sure. For sure.
How about this, Tom? At the beginning of the video, I mentioned that there was a financial benefit to anybody who stuck around to the end of the video, and we've got to the point where I think I wanted to mention that if you are looking to make your home purchase and have as little cash as possible out of your pocket, then here's what we've got. Number one, I've got my moving kit. You go to getmovingkit.com, www.getmovingkit.com, and sign up for that because you'll get thousands back, or you can use some of that money towards Apple Home products, or you can use them towards services like cleaning, painting, unboxing, any handyman type service. We can apply those funds towards those things or use it towards your closing costs, whatever you please. And in addition to that, Tom, you've got something too, don't you?
Absolutely. So for the folks that we handle their financing for them, is that we always offer to reimburse their appraisal fee for them. So that's somewhere between $500 and $600 for the borrower.
And the next thing I thought I'd let you know is I've got a great video right here on the conditional loan approval process and what that's like. So go and check that out, and I'll see you there.